everybody. So the first chapter that we're going to be talking about is chapter 5, which is dealing with accounting systems. So we are basically going to expand the number of journals that we utilize and expand the number of ledgers that we're going to be looking at. So when we're talking about our ledgers, so our general ledger is not going away. We're still going to have our general ledger, and our general ledger is going to look exactly the same as it's done before. It's going to have every single account that's included in our chart of accounts, and each one of those are set up in order of account number, so that does not change. The only thing that we're going to do is we're going to expand on that in two areas, into what we call subsidiary ledgers. So, for example, if you look at the general ledger account for accounts receivable, it might say that we are waiting to receive $200,000 from our customers. So we have a debit balance of $200,000 in that account. But it doesn't tell us who actually owes us that money. Same thing on the accounts payable side. If we go into our general ledger for accounts payable, it might show that we have a credit balance of $60,000, but it doesn't tell me who I owe that money to. So those ledger accounts for accounts receivable and accounts payable are what we call controlling accounts. They're giving us the overall values in those two areas, so accounts receivable and accounts payable. But what the subsidiary ledgers are going to do is they're going to provide us all the detail to where we're coming up with those figures that we're seeing in the general ledger accounts. So we have an accounts receivable subsidiary ledger and accounts payable subsidiary ledger. So the accounts receivable subsidiary ledger is going to have a ledger for every single customer that we've done business with on account. So any customer that we've provided a service to on account is going to have its own ledger in the accounts receivable subsidiary ledger. That subsidiary ledger is set up in alphabetical order. And anytime someone does business with us, we are going to post that to their specific subsidiary ledger. So if we provide them a service on account, it goes into that subsidiary ledger. If they make a payment to us, we finally receive that cash, we post it to their subsidiary ledger as well. So again, if we look at the general ledger for accounts receivable, and it says we are waiting to receive $200,000, I can then open up the accounts receivable subsidiary ledger and see all of the customers that have outstanding balances. So I can reach out to those customers and say, hey, you owe me $5,000, you owe me $2,000, whatever the case may be, and I can see all of that detailed out. So now I know who, in fact, I'm waiting to receive money from and how much I'm waiting to receive from each customer. Same thing on the accounts payable side. Every supplier or vendor that we make a purchase from on account is going to have its own ledger in the subsidiary ledger. Again, our subsidiary ledgers are listed in alphabetical order, and it's going to show anytime I've made a purchase on account, who I owe money to, and anytime I've made a payment on account, how much I've reduced that outstanding balance by. So again, if I look to that controlling accounts payable general ledger account and it says I owe $60,000, I can then go into the accounts payable subsidiary ledger and see exactly who do I owe that $60,000 to. We're also going to take our general journal and kind of split it up into what we call special journals. And basically what special journals are really designed to do is record a single type of transaction so that our general journal doesn't have to be 5,000 pages long. We kind of have different books, if you will think of it that way, or different journals that are going to record different types of transaction. The key thing to keep in mind when you're dealing with special journals is that when you record a transaction, it only goes into one journal. So if I record a transaction in one of my special journals, it does not also get recorded in my general journal. So everything only gets recorded in one journal. Our general journal, just like our general ledger, isn't going away. It's just going to be used less frequently than we have in our past. So we have 4 special journals. So we have a revenue journal, a cash receipts journal, a purchases journal, and a cash payments journal. And again, each one of our special journals is recording one type of transaction. So our revenue journal is only going to record services that we provide on account to our customers. My cash receipts journal is only going to be recording when my business receives cash for any reason. My purchases journal is only going to record when I have made a purchase on account. And our cash payments journal is only going to record anytime we've paid out cash for any reason. Again, our general journal is still there. We're still going to utilize it, but it's only going to be used when a transaction doesn't fit into one of these 4 special journals. So for example, if we have to do an adjusting journal entry or we have to do a closing entry, those would be sitting in one of our special journals. Wouldn't be sitting in one of our special journals. It would have to go into our general journal. So let's look at each one of these a little bit more. So our revenue journal, again, is any time that we are recording fees that we have earned, and the key phrase here is on account. Only when we provide services on account is it going to get recorded in our revenue journal. A key word to look for, you know I love giving you guys some key buzzwords to pay attention to. Anytime you see that the business has issued an invoice, that means it's done on account, which means it has to go into our revenue journal. So anytime you see issued invoice, you know it's going into your revenue journal, because the only way that we're sending our customer an invoice, which is essentially a bill, is when we have provided them a service and they haven't paid us yet. So look for that key phrase right there, issued invoice. Every transaction that's going to get recorded into our revenue journal is also going to get posted to our accounts receivable subsidiary ledger, because every one of those transactions is going to affect accounts receivable because it's for services on account. So they all have to get posted to our accounts receivable subsidiary ledger. The other thing to note when we're talking about our postings is now that we have 4 special journals and our general journal, we can't just post the page number when we do post references, because if I post page 20, that could be page 20 in my revenue journal, my cash receipts journal, my purchases journal, my cash payments journal, or my general journal. So we have to indicate which journal page 20 we're dealing with. So for example, if we're posting from our revenue journal, we would write the little letter R and then 20. So R20 would indicate revenue journal, page 20. Our cash receipts journal, like I said, records any time we receive cash for any reason at all. So that could be that we're receiving cash for a service that we provided to our customer that day and they paid us cash that day. It could be that when we get our cash from customers paying off their accounts receivable balance, that would go into our cash receipts journal. It could be that our owner is investing additional money into our business. That would go into the cash receipts journal. The great thing about our cash receipts journal, again, it's recording one type of transaction. It's when we are receiving cash for any reason, which we know then the debit is always going to be to cash because our cash is always going to go up. So our debit column is always going to be for cash. If any transaction is recorded in the cash receipts journal and it affects accounts receivable as well, so when our customer is paying off their receivables balance, for example, that would also have to get posted into our accounts receivable subsidiary ledger. Also, when we do our postings, again, make sure you're indicating which journal it's being posted from. So for our cash receipts journal, we would indicate it with a CR and include the page number. There also can be what we call the other accounts column. At any time we have something affecting the other accounts column, that other account, whatever that account is, we have to go to the general ledger on the date of that transaction and post to that general ledger account. And we'll get into a lot more of that with some of the example videos that I have for you. The accounts receivable subsidiary ledger, again, the 2 special journals that will be feeding that are your revenue journal and your cash receipts journal. And at the end of the month, the balance that we see in our general ledger for accounts receivable must equal the sum of all of my subsidiary ledgers. So again, it's providing that detail, so they do have to match at the end. Our purchases journal is for any purchase, again, that we've done on account only. If we've paid in cash, it does not go into our purchases journal because every transaction is going to be affecting accounts payable. Every transaction that we record in our purchases journal has to get posted to our accounts payable subsidiary ledger. And you will see in our purchases journal that companies will have specific column headings for things that they purchase frequently on account. So maybe they're buying office supplies on account. Frequently, they might give it its own column. They'll also have that other accounts column. Again, we'll get into more of that when we get into our example videos. And those other accounts would get posted individually into the general ledger. Again, when we do our postings, we would indicate it from the purchases journal with a P plus the page number. And then our cash payments journal is when we pay out cash for any reason at all. Again, a key phrase, buzzword to look for here is when we've issued a check or wrote a check. Anytime we're writing out a check, that is cash that's leaving our business. That would indicate that it's going to be in our cash payments journal. So that might mean that we're spending cash to buy supplies or to pay for our prepaid insurance premiums. It could be to cover our wages expense or our rent expense. We're paying for our salaries and wages of our employees or the rent for our office building. It could also be if the owner has taken money out of the business, done a withdrawal in cash, that would go into our cash payments journal. If we are paying off an accounts payable that we owed, that would also go into our cash payments journal. If a transaction is recorded in the cash payments journal and affects an accounts payable, we would also have to post that to our accounts payable subsidiary ledger. And again, when we do our postings, our reference for our cash payments journal would be CP plus that page number of the journal. And again, just like your accounts receivable subsidiary ledger has to match your balance in the accounts receivable general ledger, same goes for your accounts payable subsidiary ledger. The sum of all of our subsidiary ledger balances must equal the balance that we are seeing in the general ledger for accounts payable. So that is chapter 5. Again, on Blackboard, you'll find a whole bunch of examples of each one of these journals and ledgers that we are going to be utilizing in this chapter.